Hey guys, welcome back. So in today's video, I wanted to go over Starbucks and how I view Starbucks after COVID. So I'm going to be starting this little series here on the channel, and it's really me just taking a look at companies right now, trying to block out the short-term noise and the short-term pandemic that is currently going on, and really look down at the business and see, okay, what does this spell out for this company, 5 years from now, 3 years from now, whatever. And because, the stock prices are fluctuating, like Starbucks alone has fluctuated between a 50% from its high to its low, and now it's back up over about 35% from its recent low in just a few months. So obviously the volatility is very high in a lot of individual businesses, especially those that are more, open to disruption from COVID. And so I want to take a look at those companies and figure out, okay, how much of this volatility is justified, and what does that mean for someone with a long-term perspective that is interested in owning a part of these types of businesses. So Starbucks is going to be the first on my list. Hopefully you guys are interested in that. If you guys want any more particular stocks, make sure to drop a recommendation down in the comment section down below and I'll try to get to it. But I want to look at Starbucks right now because I think Starbucks is actually a very interesting story right now with the overall market situation. I think Starbucks is going to face many challenges in the short term, but it might actually have a lot of opportunities open up because of this. So just to go over my overall thoughts about Starbucks right now is that you need to look at Starbucks from a few things. The strategic standpoint and where the company fits in its overall industry and in its segment of the market. You need to look at the company's financial health because right now, more than ever, companies' financial health are going to get tested more than any other point in time, probably in our lifetime, about how much, liquidity is going to make or break a lot of companies. Now, another thing to keep in mind is what is management doing? What is management taking? How is the public perceiving management? And then also, what is the psychology around this business? And then how are consumers dealing with this whole situation? So starting things off though, with the overall strategy and positioning in the market. Starbucks has always been, the pinnacle cross section between premium coffee and then constant availability. So Starbucks is definitely a more premium option than you have McDonald's, Burger King, Tim Hortons, Dunkin' Donuts, all those big chains. Starbucks is definitely the most premium type of coffee you can get, regardless of, your overall tastes and how much you think that you're willing to spend on a coffee. Starbucks is the premium pick for the majority of people. And the premium section of the coffee market generally runs into issues when, you have a Starbucks, but they have a blue bottle, or they have a small local roaster that they generally will have higher quality and fresher beans than a Starbucks location because they're much smaller and they're locally sourced. Now, that has normally always posed an issue for Starbucks because people that want the best premium coffee for a given area, if there's a local shop right there, Starbucks is going to be losing a lot of business. However, with the whole COVID situation going on right now, a lot of those businesses probably will not be open a year or two from now. Sad story. With the way that most restaurant businesses operate and the fact that margins even on coffee shops can fluctuate drastically just through wage, tech, innovation, all that, a lot of those companies weren't on super strong financial settings before COVID, and now they're essentially looking at having zero sales with their leases, their pensions, their wages, everything like that. Anything they could possibly have for their fixed costs are still going to be ongoing. And while, yes, there are a lot of loans being given out from the government and then also companies like Facebook that are kind of pumping loans to all these companies, I really don't see any more than maybe 60% of these chains actually making it through the whole pandemic. Starbucks, I think, has the ability to gain a lot of market share and a lot of positioning in the market because of this. I think Starbucks can start rolling out more roasteries, more premium type of coffee head areas that I think will allow them to really secure more of that, say, elitist section of the coffee space, and then also a lot of their competition on the local level die out. And so I think that actually poses a, survival of the fittest type of mindset. And I think if Starbucks makes it through, then I think they're going to be able to gain a lot of market share once everything starts to rebound because of it. It's similar to what happened in 2008, 2009. Starbucks rapidly expanded and then was able to really drastically kind of grab hold of the coffee market during that time. And I think that they're going to be able to do it if they survive again with this pandemic, because any coffee shop that doesn't have a drive-through is essentially closed for the foreseeable future. And I don't think many businesses at all remotely plan for that in their pricing. Now, so that aside, kind of like the overall thesis of it, what is the logistics that Starbucks is actually going to make it through this whole thing? Starbucks is closing down stores left and right. In China, at one point, they had 90% of their stores closed. In the United States, they're going to probably range between 70 and 90% of closures in the high heat areas. So like Massachusetts, the majority of Starbucks that I've normally approached in my daily life, whether it's in Lowell, where I'm from, in Boston, any of those areas, 9 out of 10 Starbucks are all closed. And, are they going to be able to deal with the fact that they're paying their workers, they're paying for their leases because they all own all those stores? It's not a franchise. Can they keep the doors open with months of lost revenue? And I think looking at their balance sheet, and I've talked about this numerous times, their balance sheet is definitely over-levered, and they've been rapidly expanding via debt because it's been cheap. And now they're dealt with the fact that, hey, we still have a lot of debt to pay off, and we're not going to have any income coming in for a foreseeable future. So taking a look at their liquidity ratios, they're definitely not great. They are, they will work, and the company does have the ability, because of how large it is, to take on debt. And with how interest rates are very low, and with how everybody's pretty much scrounging to just make loans right now, I do think that they won't have the most difficult time to make loans. But this does open them up to a lot of credit downgrades, which can send the stock through a tizzy in and by itself. But when you look at the fact that their interest coverage ratio up to this past year was sailing between a 15 and a 30%. So that means that they had, after all of their expenses and everything, they were making 15 to 30 times what their payment on debt was. And so if you take that snapshot and you say, okay, this company is going to lose 70% of its revenue for the next year, and you add in the amount of cash it has on hand currently, Starbucks, in my opinion, is still relatively financially safe. It is definitely not the safest business to be in right now, but I do not think that doors are closing in perpetuity. I do think that they will be able to weather it based off of these financials. These are the ones that I think liquidity are definitely the most important that I'm focusing on right now. And it'll be really interesting to see what type of debt movements the company prioritizes, whether it's taking out new debt or paying off debt, over the next couple of months to really see how does the company see its financial footing, and then what does the company want to do moving forward. And then finally, I'm taking a look at what is management doing, because management is the thing that's going to be driving the company in the foreseeable future. Ever since Kevin Johnson stepped in as the current CEO of Starbucks, he stepped in shortly after I started my first position in Starbucks. The company's been saddled up with a lot of debt, and you guys know this if you've been following in my channel. I have been complaining about this for years. Now, with Kevin Johnson's approach to COVID, he was really kind of emphasizing, hey, we learned a lot about this stuff from China because that's where we were very exposed to the initial outbreak, and now we're kind of using what we learned there to apply to all of our stores in the United States. And he doesn't seem too worried about his balance sheet. Obviously, you can't have the CEO outwardly say that they're worried about what's going on, but his actions also speak that he's not too worried about Starbucks in the foreseeable future either, because he has increased employee wages. So any partner that goes into the store, they get a $3 raise during these times, or the partner is able to just stay at home and say that they feel uncomfortable for the foreseeable future. Originally it was for 30 days, and now he's extending it another 30 days. And I imagine Starbucks is going to continue to do this type of, benefits package until the situation's over, because they don't want to lose their valued baristas, managers, everything like that. Not to mention that the company's also been adding in a lot of mental health benefits in that sense. So unless Kevin Johnson is totally wacko, and I don't really think he is, given his track record of working with Juniper and Microsoft and all that, he's definitely a seasoned executive. I don't think he is at all worried about Starbucks' financial health, which bodes good for me. They are suspending their stock buyback, which I think is a bit ironic. This always happens when companies that get over-levered, they push back the stock buybacks right when the stock gets cheap. And, as a shareholder, you don't really want to see that, but they said that they are not suspending the dividend. So I have mixed feelings about exactly what financial positioning that they're putting themselves in, but I really want to pay attention to what does Kevin Johnson do now with the fact that debt is much cheaper than it has been in recent years, and the fact that the company may or may not be facing liquidity issues, say, if this type of pandemic goes beyond a year. So that'll be something that I'm really interested to see. And then I also want to see, with their earnings report coming up in just a couple of days, what type of crunch are they feeling on their cash position and their free cash flow from all of their individual stores. That's something I'm definitely worried about as an investor, but also intrigued to see how well they were able to reposition themselves quickly, given the fact that they were referencing a lot of what they have already been exposed to with China, and now they have over 70% of those stores already back open. So as a summary, obviously, my overall opinion of Starbucks stays roughly the same as it has always been. Starbucks has an amazing return on investment in terms of every time it opens up a location, it generates a lot of net cash flow from it. They have extremely high margins for a retail chain. So it'll be really interesting to see kind of how their strategic positioning goes for opening up new stores, everything like that. But overall, each of their stores are moderately very cash flow heavy. And from a consumer standpoint, it's still pretty strong. I do think the Starbucks brand is pretty airtight. I think that once people start going back to work, they will continue to go back to Starbucks every day. The only thing I see really worrying on that regard is the fact that work from home might be a lot more common after the pandemic than it was beforehand. And the less people are actually going into work, there's going to be a huge correlation to the amount of people actually going and buying a coffee at 8, 9 a.m. in the morning. So it'll be interesting to see those trends. I think that's something that not a lot of analysts are paying too much attention to right now based off of the headlines, but that's something I'm definitely keeping my eye on. And of course, obviously, my cons are essentially the balance sheet. Again, no matter what it is, the biggest qualm I have with Starbucks, I think they can scale well. I think the brand's amazing. I think the margins are good. I think their return on equity is great. But I think that their debt is a bit frivolous. And I think that they really need to rein in some control when it comes to their financial spending. And right now is going to be kind of a testament to that. A lot of companies in the restaurant sector have all done this. Starbucks has been punished because of it from its stock price. However, it has bounced back much faster than other companies, and I think it's because the market knows Starbucks will stick around through the pandemic, and it's going to fare better than the other companies that are also saddled up with debt. So overall, that's really my main concern. Doing the base liquidity, analysis that I've done, I'm not too worried personally for them over the next year, but at the same time, I'm also not willing to pay a premium at all for the company in this type of environment. I will only be buying any more shares of Starbucks if the price is attractive enough. I did buy Starbucks back when it dipped about $50 a share just a couple of weeks ago. I did buy some there, added to my position. That was nice, but I didn't add a ridiculous amount to my position because I could possibly see the stock price going into the mid 30s even if COVID starts to turn for the worst. Who knows if that'll happen? I hope it doesn't happen. For the overall health of the world, I hope that doesn't happen, but I'm not ruling that off the table yet. And so I will not be making a big position for my personal portfolio until around the $35, $40 range. So that's kind of my overall takeaway from Starbucks. I think they'll survive. I think it'll be rocky. I think management knows what they're in for, so let's see how it plays out, and I'll trust management to see through this storm. So that's my overall takeaway from Starbucks. Let me know what you guys think in the comment section down below, and let me know what other companies you guys want me to talk about. And thank you guys again for watching, and I'll catch you in the next video. Peace.